Thank you for coming back to the program. This is ASEAN Business Report, and we are now moving on to catch more regional updates, starting with Myanmar. Surging land costs in Myanmar set to challenge the Hong Kong-owned factories in the Pearl River Delta in the face of shortages in the coastal areas of mainland China. A mission to Myanmar last week led by the Hong Kong Trade Development Council (TDC) and comprising 160 delegates from a wide range of industries began with high hopes of finding investing opportunities, but ended with little success, due partially to high rental costs and concerns over an unstable electricity supply. Factory rents in the Haleng Tar Yar industrial zone, the second largest such zone in Yangon, have risen 20 to 30% over the past year to $5 per square meter per month, a level the delegates said was on par with mainland China. Industrialists say that the opening up of Myanmar has lured investors from across the globe, where Hong Kong investors are not of the utmost importance to as the once pariah country is looking to upgrade their technology in manufacturing. Adding to this, Myanmar's Deputy Minister for Industry, U Tien Ong, said Hong Kong manufacturers were late if they wanted to form joint ventures with local partners to acquire large sites of industrial land in Yangon. A Japanese consortium led by Mitsubishi acquired a 49% stake in the Tilawa Special Economic Zone in November last year with an area of 2,342 hectares, 4 times bigger than Haleng Tar Yar. Last year, about 15% of the $41.5 billion in foreign direct investment into Myanmar came from Hong Kong, lagging behind mainland China with 34% and Thailand with 23%.
And moving on to Indonesia, as the SME Ministry of Indonesia has announced it will grant money to facilitate entrepreneurs in obtaining land certificates to help them meet the loan requirements in a bid to upgrade existing SME businesses. The ministry's Deputy Assistant for Funding, Tamin Saifuddin, said that a grant of 25 million rupiah will be given to 1,500 novice entrepreneurs on March 18. Then another grant out of 54 billion rupiah budget, or $5.5 million will be given to the others nationwide. Most of the enterprises have little access to loans because they cannot take out the required mortgage or in the first place shy away from the complex procedure and also from banks' high interest rates. To facilitate the entrepreneurs accessing credit, assistance has been given to the business runners to get land certificates. Now, challenges of Indonesia's SMEs are that 70% of the business players were not business viable or bankable because of low quality of human resources, inadequate marketing skills, and lack of partnerships between players.
And from Indonesia, let's move to Vietnam, as Vietnamese businesses are enjoying more investment opportunities in Cambodia thanks to preferential trade conditions offered by both countries. And Vietnam is expected to increase its Cambodian market investments to $3.2 billion. The value of two-day trade is predicted to hit $5 billion in 2015. Cambodian Planning Minister Chey Than says Cambodia is improving conditions for foreign investors, including those from Vietnam. Vietnam-Laos-Cambodia ministerial meeting has been scheduled for the end of March 2013 to draw up plans aimed at developing the Triangle area into a famous industrial and rubber production zone. Vietnam is currently Cambodia's second-largest trade partner. The country's key Cambodian exports include plastic home appliances, instant noodle, and spare electric parts. It imports mainly rubber, wood, tobacco, and raw materials for the garments and textile sector. The Vietnam Ministry of Planning and Investment statistics show that by the end of 2012, Vietnam had 104 projects in Cambodia, representing a total registered capital of $2.42 billion, 4 times higher than the previous 3 years' level. Vietnamese businesses dispersed nearly $300 million in Cambodia in various socio-economical important fields like the telecommunications, agriculture, and financial services. Experts suggest that Vietnamese businesses should utilize their advantages and the incentivized investment policies in Cambodia's telecommunications and industrial tree planting. And they say that exploring opportunities in emerging industries like construction and real estate would also be wise.
And now on to another topic, Mr. Hapat, as ahead of stepping up to the 22nd ASEAN Summit that is going to be hosted by Brunei. In Vietnam, the governments of ASEAN and EU countries have been urged to facilitate the trade and investment between the two blocs through efficient cooperation mechanisms, as well as transparent and fair economic policies. Now, this was the message put forward in the 3rd ASEAN-EU Business Summit and was also part of the 19th ASEAN Economic Ministers Retreat held in Hanoi, Vietnam. ASEAN Secretary General Le Long Min said despite risk caused by the global economy, ASEAN and the EU still possessed favorable conditions for economic development. The two sides, he said, should tighten their coordination to cope with the impacts of the global economic turmoil, because no country could separately respond to the situation. The ASEAN Secretary General also proposed that the governments remove factors causing unstable macroeconomies and regularly hold dialogues between governments and enterprises about the issues of markets. And also the EU Trade Commissioner Carol de Gucht said that ASEAN is one of the EU's biggest trade partners and vice versa. So negotiations for ASEAN-EU free trade agreements should be accelerated to create a legal framework for bilateral relationships. In particular, ASEAN has been urged to build a common set of regulations in finance and banking, and also a joint payment mechanism among ASEAN banks to serve the businesses in the region.
And Kunjeri, on to the different story. According to the activistpost.com that came with the 5 best countries to move to before the collapse of the West. And the website said that Western countries led by the United States and the Europe are in deep economic trouble. And they said that massive debt levels are now struggling their economies.
That's right, Kun Satapat. That's why it brings us to another issue about the Fitch ratings have also made a lot of has made a list of the credits rating for Thailand and also the countries in ASEAN and the EU. Let's go and have a look.
Credit rating agency Fitch Ratings has upgraded Thailand's long-term credit rating by 1 notch to BBB+ from BBB with a stable outlook. Fitch cited Thailand's resilient economy and a more stable political environment as reasons. The new rating is in line with other ratings agencies, Standard & Poor's at BBB+, and Moody's at Baa1. However, the rating is still considered lower medium grade for the 3 agencies. This places Thailand behind Malaysia by 1 notch. Malaysia with an A grading enjoys an upper medium grade for investment. Other ASEAN countries such as Indonesia and the Philippines fall behind Thailand at BBB- and BB+ respectively, with a stable outlook. In Europe, Fitch cut Italy's sovereign rating by 1 notch to BBB+ with negative outlook. It cited that the increased political uncertainty and a non-conducive backdrop for further structural reform measures constitute a further adverse shock to the real economy amidst the deep recession. S&P gave Italy the same rating as Fitch, while Moody's assigned a lower rating of Baa2. European leaders will hold their regular quarterly meeting or the Euro Summit in Brussels on March the 14th to the 15th. The Italian Parliament will hold its first session on Friday, after which formal consultations with President Napolitano on forming a new coalition government can begin. However, Deutsche Bank believes that there is very little room for a stable and pro-reform government to be formed. An early election in 6 to 12 months ahead remains its base case scenario. In Europe, France, Germany, Luxembourg, and the Netherlands still have top credit rating of AAA by Fitch. Greece remains its junk status at CCC.
Now, continuing with what you were saying earlier, this is totally not connected to what the report was talking about, but there is a link. You see, the activistpost.com has made a list, Kun Satapat, for 5 countries that is the country, hopefully, that we could move to if there's a collapse in the West. And they also deem that it is looming. So we should start with the 2 ASEAN countries.
Right. Starting with Thailand, the website said that Thailand, which is generally peaceful and with a rich Buddhist culture, the country has the lowest cost of living on the list. And the website also said that the country is also deemed to welcome the Western expats, and they can enjoy a high level of modern comfort for much cheaper than almost anywhere else in the world.
Right.
And according to the website, Thailand is also a great central hub to explore the rest of Southeast Asia.
Definitely that applies to Western expats. Now, up next, Malaysia. Let's go to Malaysia, as it is deemed the most developed country in Southeast Asia besides the city-state of Singapore, where Malaysia has a booming economy, well-educated population, excellent infrastructure, fantastic public transportation, and nearly everyone speaks English. Now, that's helpful. Right. And also, Kun Satapat, its capital, Kuala Lumpur, is one of the most affordable and cleanest modern cities in the world.
Right, and the rest on the list is Mexico, which is, according to the website, although the country relies heavily on trade with North America.
Right.
But the country also maintains a high level of food and energy self-sufficiency and have much freer economy than the U.S., followed by Chile. The country is a fully developed country with modern cities, and it is also one of the South America's most stable and prosperous nations to live in.
Right, and the last one is Uruguay. They said Uruguay, also a South American country, is considered one of the freest and most libertarian countries in the world. From there, we're going to take a short break, but stay tuned as we come back, as China's economy is still facing uncertain direction. Stay tuned.